Welcome. It's a very pleasure to welcome to Florence today for the third BABEL International Conference in cooperation for the first time, and we are very, very glad here, with the European Banking Institute. I leave immediately the floor to the rectors of the University of Florence, Professor Alessandra Petrucci.
So good afternoon, and welcome again to our university. This is our Aula Magna, and it's a pleasure to host you for this important meeting, the third edition of BABEL International Conference. I'm very, very grateful of your presence. And as you know, our city, Florence, is famous also because the Medici family changed the banking system radically, supporting artistic innovation, and not far from here, in Prato, the merchant Francesco Dattini invented the bill of exchange system. Therefore, here there is a genius loci that enhances this tradition that today brings you to our city to investigate a fundamental moment of transformation in the history of finance. So I have a look of the program, I'm browsing the program, and I have understood that this meeting represents a significant opportunity for discussion for young researchers who taking this first step in the academic world, and will be called upon to shape the future of research in this area. The conference brings together distinguished voices from academia, central banking, legal research, and technological innovation, which are rich and very varied program based on transdisciplinary dialogue that harmonize technological progress with prudential supervision and market efficiency with systemic stability. The reflection you are developing on digital currencies must not lose sight of human values and social benefit, because any intervention must take into account the reference context and place man at the center. Professor Zatti rightly emphasizes that Florentine humanism has been successful in this perspective, and the commitment must be aimed to maintain this approach. And so I thanks Professor Zatti also for this, for share this thinking, also to organize, obviously. And so I'm very grateful to you all for your participation and your valuable support, wishing you a pleasant stay here in our university and in our city in Florence. Thank you very much.
In life, someone is more lucky than others, and we are very lucky to be born in Florence. We have a lot of beautiful things, and we are inspired by the beauty of this town. So thank you, rectors, for reminding us the essence of our city. Thank you so much. If you want to stay, we have now the Chancellor of the European Banking Institute, Mr. Leone, Enrico Leone.
Dear ladies and gentlemen, dear lucky friends, it's a great pleasure for me co-opening this conference this afternoon, which the European Banking Institute I represent is very happy to support. Let me extend EBI's gratitude to the Florence University for their organizational effort, Professoressa Alessandra Petrucci, and in particular Filippo Zatti, Professor Filippo Zatti, who has been the promoter, the mind, and the engine behind this event. Professor Zatti, who I'm happy to remind, is one of the fellow members of the European Banking Institute, has kindly requested EBI to participate and collaborate for the success of this event, thinking, I imagine, that our institute was the perfect partner as our mission is fully in line with the spirit and targets of this conference. Let me spend a few words to introduce you our academic project. The European Banking Institute was founded 10 years ago with a dual purpose: to establish a coordinated and structured approach to research in European banking and financial regulation, and to facilitate the meaningful dialogue between universities, regulatory bodies, and the banking and financial industry, enhancing our collective understanding and crafting effective solutions for Europe. Today, EBI proudly encompasses 36 academic members across 23 European countries, each with a specialized and recognized focus on banking and financial regulation. Under the academic leadership of Christos Kostros, EBI has achieved significant milestones. The publication of over 180 research papers within the EBI Working Paper Series, the launch of the EBI book series in collaboration with Belgrave Macmillan, the development of a comprehensive database of EU cases in banking and financial regulation, the weekly dissemination of the EBI regulatory report, detailing economic policy and financial regulation measures in Europe. And finally, the formation of the Associate Researchers Group and the Young Researchers Group, fostering interdisciplinary collaboration and learning. Overall, we have more than 150 experts in the field of banking and financial regulation collaborating with EBI. EBI was honored to be selected by the ESAs as one of their academic partners under the University Partnership Program. And it's our intention to have with them a long-term and intense collaboration we expect will benefit our academic members and their research output. Even if these are remarkable achievements by themselves, our project is in constant evolution and is benefiting from suggestions and ideas from our academic, institutional, and supporting members. The unique aspect of EBI is the robust support from the banking industry, both private and public institutions. I would like to acknowledge the essential contribution from our supporting institutional members who have helped EBI financially and continue to do so, allowing the development of our academic project. Here in Italy, I would like to thank the ABI, the Association of Italian Banks. Our advisory board members include senior representatives from national supervisors and European public institutions, and they have been instrumental in enriching our academic activities with their expertise. Together with the representative of the supporting members, we have the pleasure to be advised and guided by representatives of the ECB, the SRB, EBA, ESMA, ECA, BaFin, Bank of Italy, the Banco de España, the Dutch Central Bank, and the Portuguese Central Bank. This synergy is what transforms a well-crafted research into solutions with a real-world efficacy. Today's conference is an example of this approach. It aims to stimulate the debate among academia, stakeholders, and regulators, and it is focusing on very relevant topics, which are on top of the political agenda of the European institutions. Our panelists will analyze and discuss the legal and economical aspects and consequences around the reshaping of monetary landscape through digital currency and payment systems, so contributing in understanding of one of the strategic objectives of the EU, which is strictly connected with today's debate, the creation of digital euro, its implications and potentials. For example, if digital euro will be able to counter the growing dominance of US dollar-backed stablecoins and protect the Eurozone monetary sovereignty. If I may add some element to the discussion, it would be useful if the panelists and speakers could consider the position of the banking industry, and in particular give their contribution and elaborate on how to preserve the intermediary role of banks, how to ensure that the digital euro is distinct from electronic payment methods, and how its introduction will develop new services or improve the existing one. Many thanks for your attention. I leave the stage, I think, to Professor Maria Elvira Mancino, Head of Department of Economic and Management, for her introductory remarks. Am I right?
Thank you.
Or am I right?
Yeah. That's how EBI works, very efficient, because you already substitute my role. Thank you, Mr. Leone. Thank you, Enrico. And now it's my pleasure to introduce the head of the Department of Economics and Management here at the University of Florence. She's a mathematician, and she is Professor Maria Elvira Mancino. Maria Elvira? Thank you. From
Filippo.
Barcelona,
Okay.
because she studies now for a visiting period there. Thank you, Mavira.
Thank you, Filippo. Can you hear me? I hope so. Thank you very much. I am sorry not being there with you in this beautiful place, our University of Florence, but I am visiting another beautiful place, the University of Barcelona. So on behalf of the Department of Economics and Management, I would like to welcome all of you to the conference. It is really an honor to host scholars, researchers, professional students from around the world gathered here to explore the challenges and opportunities offered by digitalization of money, tokenization. Tokenization represents really a revolution in the way digital assets are conceived and managed, enabling the transformation of physical financial assets into easily transferable and divisible digital tokens. This evolution can actually increase transaction efficiency, reduce cost, promote financial inclusion, and opening new perspective for emerging economies, a more resilient financial system. But the issue of regulation and legal recognition of the digital money is really crucial. The definition of a legitimate tender must adapt to this new reality, ensuring the stability, the protection of consumers, and the compliance with the international regulation. Your conference really emphasized the importance of the dialogue among legislators, innovators, stakeholders, in order to shape a regulatory framework that can encourage the responsible adoption of digital currency and tokenization technologies. Only through careful regulation and shared understanding of the potential and the risks, we can fully harness this potential of the digital revolution, contributing to a modern, inclusive, and stable monetary system. This conference thus represents an important opportunity to share innovative ideas, discuss the economic and social implications of new technologies, and contribute to shaping a new, efficient financial future. I thank all the speakers and participants for their contribution and their interest in this highly topical subject. A special thanks also goes to the organizers, particularly Professor Filippo Zatti, for making this event possible. I know a lot of work has been done in this direction. I hope that today will be filled with stimulating discussion, sharing, and constructing exchange. I wish you productive days of insights and idea exchange. Thank you very much for being with us and for the work you will be doing during these days. Thank you, Filippo.
Thank you, Professor Mancino, for the kind words, and especially for having found time to stay with us. I think it's the first time in Italy that we are short of time in the sense that short in the sense in the contrary, because we are earlier than expected. So my speech was at 3:15, but I try to introduce now. Probably we dedicate more time, not now. Now the director of production, Dr. Ferri, told me, no, I had to stop it, please. But I don't know how exactly have to say without talking to the speaker. Sorry, I think it's better because I have online Professor Mancino, so I can continue. Thank you so much. Okay, I've written some words because we have, in a way, yes, in 15 minutes more or less, is lasting my short introductory remarks, and then we have Professor, as you know from the program, Professor Chu from London. Honorable Rector of the University of Florence, Chancellor of the European Banking Institute, Head of the Department of Economics and Management, distinguished speakers and colleagues, ladies and gentlemen. The idea of hosting the conference in Florence dates back to 2023. In the autumn of that year, the research project we had presented, led by the University of Turin and Milan Bicocca, had been granted by the ministry, the Italian Ministry of the Research and University. The project, whose principal investigator is Professor Riccardo De Caria of the University of Turin, obtained funding for a project named Designing a Governance for the Tokenized Economy in a Decentralized Era. The research team comprises researchers from different scientific backgrounds, law, economics, and computer science. The research topic of the Florence unit led first to the publication of a volume, probably already met it before entering the May Hall, and this volume was co-edited with another organizer, to whom goes my very deeply thank Professor Rosa Giovanna Barresi. This book was published earlier in 2024 in the Rutledge Giapichelli Studies in Law series, and then led to this conference. In the fall of that year, we are talking still about 2023, we first discussed the possibility with Professor Christos Gortzos, chair of the academic board of the European Banking Institute, who is with us today, and is going to take the floor as a chair in a few moments. We thought exploring the issues related to the evolution of money as digital and how it could affect the current financial and monetary system. We thought that was still and indeed relevant. Professor Gorzes and Mr. Leone encouraged the idea. I must thank both for their enthusiasm and vision. Thank you. Indeed, it was not so easy those days to imagine our current living scenario. In our region, meaning Europe, the markets in crypto asset regulation, MiCA, came into force on June 29, 2023. The day before, the Commission issued 2 regulation proposals, as you probably know, concerning establishing a digital euro and another on the legal tender of euro banknotes and coins. After almost 2 years, we are still waiting for the first reading procedure to be completed by the European Union Parliament. At the same time, the digital euro preparation phase, which started again in the fall, November 2023, is expected to be completed by next fall this year. In other regions of the world, many other central banks are exploring the possibility of adopting a central bank digital currency to varying degrees. However, the very few solutions adopted so far suggest that citizens are wary of using this currency instead of physical currency or even electronic money. The reasons given are varied and seem to differ mainly according to the role that the financial and banking system plays in the economy in question. This leaves room for hybrid solutions in which fiat currency is brought back into play by pegging the value of a private digital currency to that of a public currency. I think, obviously, you understand, of stable coins, referred to by the European legislator as asset reference tokens. With the advent of the Trump administration, they have become a hot topic. Tether, once considered a scam, I remember I was visiting Edinburgh University. I was the blockchain center of Cardano, and the researcher told me, Tether, you're crazy, it's a scam. Now Tether, as you know, is become a functional solution to the needs of the US dollar in the face of the challenge posed by the BRICS countries to the dollarization of the financial system. The approach of the US legislator towards the crypto world, as advocated by the Genius Act, meaning, as you know, is very interesting, the acronym GENIUS, guiding and establishing national innovation for US Stablecoins Act, has changed profoundly. And the regulation of stablecoins is presented here as an intangible intervention intended to protect consumers by requiring stablecoin issuers to maintain one-to-one reserves, prohibiting algorithmic stablecoins, and require issuers to comply with US anti-money laundering and sanctions rules. Importantly, according to the proponent of this legislation, It will empower responsible innovation, maintain US leadership in digital asset and blockchain technology, and keep crypto companies and jobs onshore. This brings the analysis back to the essential issues that currency raises from a legal, economic, and today, technological perspective. That is, to the concept of monetary sovereignty and consequently to the meaning of legal tender. The time for immediate reference to the ideas of scholars, such as, such as von Hayek, who spoke, of the decentralization of currency is now over. The question now concerns the very origin of money and its conceptual confusion with that of a means of payment. I'm very glad, I'm very, happy that some of you clarify me what is the difference between means of payment and instrument of payment. No? I know from a legal perspective, but the functionality of money is not so simple. And you know that especially the executive board of the European Central Bank said many times that the digital euro is a means of payment. So it's just a question that I leave all the panelists to clarify me. The question now is not only that, but we need to reveal what really lies behind, yes, the chiaroscuro of the contrast between public and private money. Caravaggio's painting technique inspired us in sketching what is now a contrast that is interpreted in a dualistic way, but deserves greater attention from scholars in order to avoid falling into the trap of a priori distinctions between what is good and what is bad. Researchers, including those working in the legal, economic, and quantitative sciences, must have the courage to go further in order to confront politics with clear choices that are easily understandable to most people. After all, money carries with it constitutional requirements, both in terms of economic and financial stability and in terms of the transmission and recognition of rights. Not only economic, but also constitutional freedoms. This is why the analysis cannot stop at abstraction or realistic visions that subsume the idea of truth within themselves. Opportunities for discussion between scholars and the market operators at the various levels are rare. Dialogue today seems unthinkable, at least at this stage. Every organized center of interests seems only to be pursuing its own economic and financial and monetary agenda. On the other hand, there are moments in the human history when it is believed that what is being done must be completely revolutionized, only to realize that the implementation of new ideas has actually led to a world worse than before. The conference will not change this adage. But if we are here in Florence, or remotely, it is to be inspired by history, and to at least try to make a reliable contribution to such a sensitive issue as currency. This is not about writing about, as many says, the future of money. Rather, it is about outlining what money is when it becomes digital, and whether it is really just an alternative payment system useful for bridging the gap between traditional payment instruments and the possibilities offered by the implementation of distributed ledger technology. Is central bank digital currency really just a means of payment? Is private digital currency primarily a tool for financial inclusion? Opportunities for discussion between scholars and market operators at various levels are rare, and we hope to give the possibility to you to do that during these 3 days. The new opportunities offer a wide range of possibilities, but they all concern the ability to control money, not only as a means of monetary governance, but also as an instrument of economic policy. I do not wish to now revive the now abandoned concept of the programmability of money, but it is clear that it could be attractive in the future to make changes that would ensure that it can be used to control even the individual choices of private individuals. At the same time, however, technology also presents us new possibilities, such as the tokenization of money produced by the banking system, as in the case of deposit tokens, creating new conditions for instance, limiting the phenomenon of bank runs. We will try to address these issues in a unified manner in the 6 sessions represented in the symbol of our conference by the 6 Medici balls, starting with today's roundtable, continuing tomorrow with 4 panels at the Novoli Social Science Campus. And then we conclude with the second final roundtable, and thanks to the Department of Law, to Villa Ruspoli. We will look at various aspects of money and the related issues, how it is being refined, redefined, the concept of digital legal tender, and its implications for monetary policy and financial stability. The challenges facing technology, and with it, supranational organization. We have with us the Bank of International Settlement, International Monetary Fund, political institutions, and monetary institutions. We have many central banks, not only from the speaker, but also between the attendees. Our goal is to bring together our daily research on these issues, to contribute with our individual experience and expertise to improving the quality of the picture that has been painted so far. I would like to thank all the speakers, both in person and remotely, for accepting our invitation. Many of you will be meeting each other for the first time. Some have traveled a long way to be here. Florence helps us in this. But I hope and believe that you have also done so because you felt that the invitation from EBI and BABEL as research units of the Department of Economics and Management of the University of Florence was not a one-spot invitation, but an invitation to those who wish to create a sort of permanent forum on this issue. One last thought before concluding. And before we are inspired in the words of Professor Iris Chu, who will be joining, as I told you, from London. Why the title of the conference? Why use Forge instead of mint for the tokenization of money? Because it recalls the greatest challenge we face. Identify what is authentic and distinguish it from what is counterfeit or artificial. After all, blockchain technology aims to help humanity with what is most difficult to guarantee, and what it has attempted to guarantee through law, trust. This can be read in Satoshi Nakamoto's white paper, and before that, it can be read in numerous works and writings on currency. I didn't mention because I know that you know I'm referring to which kind of books and papers you usually read about it. And concretely, on every $1 banknote, in God we trust. To say that the currency is what it does overlooks a precondition of currency to function, to work. Money must first and foremost function in all circumstances and must not become a tool for anyone. The idea of money as a public good, although anomalous from a purely economic point of view, hides this very necessity. The monopoly of its legal value conceals this important ambition to belong to everyone. In a financial system in which geopolitical tensions are running high, and we are stuck with a monetary system created for a very different geoeconomic context, there is a risk of forgetting that the monopoly of public money is not a privilege, but a guarantee for everyone. I wish us all good luck in our work. Thank you.